Good morning. This is Signal Centers Talking Bull. Welcome to the show. I'm Steve O'Hare, and it's the 27th of July. So I'm going to go through the news headlines, let you know what's going on in the markets. There's plenty to get your eyes on. And then we're going to go through the charts, look at the major markets that we're looking at, look at any requests that you might send me, and drill down into what we think is going on from a technical perspective. So let's dive into it. And let's take a look. The Federal Reserve increased interest rates by 25 basis points to 5.5% at the latest policy meeting, which was in line with consensus forecast. And the committee vote was unanimous. The Fed Chair Powell stated that the impact of monetary tightening was being seen, but it would take time for the full effects to be seen. Powell insisted throughout the press conference that the Fed was data dependent. There was no set plan to increase rates at every other meeting, with the Fed watching the data at every meeting. In this context, it was possible that rates could be increased again in September or leave rates on hold. So there's no real decision or really forward guidance we can really understand. He noted that there were two labour market reports and two consumer price inflation reports before that meeting. Powell stated that the policy is restrictive and there are risks in doing too much or too little on monetary policy. But he also noted that staff are no longer forecasting a recession. Although Powell was extremely keen to keep the September meeting live, Fed funds futures indicated only around a 20% chance of a September hike with a 30% chance of a November increase. The dollar overall edged lower after Powell's comments, but the overall impact was limited given that there's little change in market pricing. The currency index posted a limited net decline on the day. The ECB will announce its latest policy decision today. Consensus forecasts are for a further 25 basis point hike, which would take the refinancing rate to 4.25%. Forward guidance from the bank will be extremely important, obviously, for the euro. There are also important US data releases today, with the US GDP data for the second quarter, as well as jobless claims data. Market expectations are for GDP growth of 1.8% and initial jobless claims of 235,000. The overall importance of data releases will increase given implications for Fed policy. The Bank of Japan will announce its latest policy decision tomorrow or Friday. Consensus forecasts are there will be no change in policy, but there is some speculation there will be a tweak to the yield curve control program. So that's the headlines. Let's dive into the charts. Start off with Bitcoin. As I say, if you want me to take a look at markets that you're interested in, do let me know, and we can see how we get on. Bitcoin is below the previous support level that we built up at 29,500, just trading below it at the moment, 29,400 on this chart, broken down below it, and potentially you can see it's forming maybe a little bit of a bearish type flag, but nothing really to write home about. The main support now will be this low that we eked out at 28,840. A breakdown below there or a close below this level on a daily basis obviously opens up the downside further. Plenty of room and scope on the downside for a pullback after the exponential rally we've seen really since November last year. Upward trending support, we could probably pick another couple of points here that we're looking at, even if we focus really on this swing low here. We should get some sort of trend support around about that 27,000 level, just above there. But really, the main market that's on the upside, let's talk about resistance as well. It's as though I'm telling you it's going down. Resistance up at 31,500, just above there. The bearish engulfing candle put an end to that, and we have projected lower since. So a couple of days of slightly positive price action, but no real break back into this range that we had. But really, everyone focused more on XRP. That's had a breakdown over the last few days, stalled in front of support. We said that support would be the low from the day after the SEC Ripple case announced. Ripple won that case, and we can see that XRP exploded higher, doubled in value at one point before pulling back to a more reasonable level. The low 66.73, that's cents, 0.6673. And we've just revisited there, or stalled in front of it, 67.40, and prices posted a bullish hammer. Here's the chart a bit closer, give you a little bit more of an insight into it. Bit of indecision yesterday and a little bit more today. Nothing really to get excited about, but there is this real sort of like almost flag pattern, so be aware of that. That could easily break up higher. Let's show you what I mean. This is like a pennant type pattern, triangle formation, and normally a break higher would you could sort of like take a measured move really from here to here and extend it higher. That's the sort of thing you're looking at. Obviously, resistance above, we've got decent resistance, 61.8% Fibonacci retracement level around about that $1 level. That would be a good one to test. And if we go back historically, we can see resistance at 91.5 cents as well. On the downside, support will definitely come in the shape of where we had the previous highs around 56 to 58 cents. They're levels to watch in XRP. Let's look at gold as well. Morning all. I'll take a look at dollar CAD for you, and I'll take a look at DAX, Sanadi, DAX, Mosh, dollar CAD. We'll take a look at those. We'll get to those in a moment. And anyone else who wants me to take a look at markets they're interested in, I'm more than happy to spend some time and go through them. I'll go through the ones we normally do, cover gold and oil. Gold, we're looking, gold's been punching higher over the last 3 days. Nice bullish, well, it looks like a bullish outside candle. No, bullish engulfing candle here on Tuesday. Wednesday, you had some follow through to the upside. This is obviously linked to, well, not obviously, but linked to dollar weakness. So we can see the dollar has index has put a bit of a top in and rejecting lower. This is leading to strength in dollar-based assets, specifically gold. That's the one to watch. We've got the neckline up here at 1985. A break of that neckline really opens up the upside. It will tell me that we have got a really nice inverse head and shoulders posted. So that for me is gold looking really decent, but obviously we had to see more dollar weakness getting down below that one level on the index. So where do we think it will go if it does break this? We can introduce a nice measured move target. We take the measurement from the head to the neckline and project higher, and that looks like all-time highs. That's projecting all-time highs. We stalled just in front of all-time highs, 4th of May. We go back on the chart, 8th of March, we got close, and the all-time high obviously posted all the way back on August 2020. So inverse head and shoulders, obviously these inverse head and shoulders are really sort of like much better at the bottom of the trend. With this is almost like it looks into trend. So, but still a classic formation. Excuse me. So yeah, 1985, the level to watch there. Fibonacci 61.8 Fibonacci retracement at 2000, and the 78.6 at 2030. But yeah, I like that. Like how that's shaping up. Oil, obviously, again, oil inventories out yesterday. Not really much reaction by the looks of things, but let me just double check. I have got the prices are updating properly now. Last few days we've seen some sideways congestion, so it looks a little bit like we're coming to the end of this nice impulsive move higher. Again, we can bring in some Fibonacci levels, but I don't think there'll be anything too significant here. We did get that spike down, that sort of spike down. I'd like to ignore that spike down only because it was like an overnight volatile move. Sunday night market open, spike lower, and before we even, I think it was that, or it might have been an evening. What day was it? It was Thursday. I think it was when the market shut Thursday. If we look at Brent crude oil, what day is this? 4th of May. If we look at Brent crude oil, you can see 4th of May didn't have the spike lower in Brent crude oil. So I like to sort of like ignore this one and really focus on these 3 points here. And if we're looking at that, yeah, 61.8% fib, we're through that. 78.6, we're stalling in front of it at the moment. So maybe that's the last significant resistance. 79.90, 80 is obviously quite a decent psychological level. $80 for a barrel of oil. That's WTI. Obviously, if we're looking at the same sort of levels on the Brent crude oil, we can see we had this triple, quadruple bottom formation. That's played out really nicely. Things like that would have like a measured move target of there to there, and then projecting higher around $86. So again, potential for more upside maybe, but it does look like it's stalling ever so slightly. Again, dollar weakness should add a little bit of upside to this market. So yeah, watch that carefully. Let's take a look. Looking at Forex, I'm going to dive into the dollar index and see what's happening. As we said, we've already taken a quick look on the daily chart. We've seen this evening doji star formation, this 3-candle formation reversal played out lovely, really good. Next real level of support down at 99.58, which was the swing low from the 14th of July and the 18th of July. Yeah, momentum to the downside there, especially after the Fed hiking rates by 25 basis points. People betting on the sort of like the rate cycle hike coming to an end, whereas other markets, the Europeans and the UK, the Bank of England, still looking at maybe higher levels than the Fed. So, excuse me. So let's take a look at, if we look at the short-term charts, 4-hour chart feels like it's breaking down. Nice shooting star candle, breaking back down underneath this Ichimoku cloud trend. So that's a trend breaking lower. And the hourly chart, you can see, has broken through that sort of like support, a couple of support levels quite clearly. And it does open up a little bit of a gap down to maybe around that 140 level, if not lower. Euro dollar, this has the opposite effect on euro dollar. You can see a nice rounding formation here. You can sort of probably drag out some type of inverse head and shoulders formation from this, but really sort of have a focus on where the major level of resistance is above, and that comes in at 111.45. It feels like we're going to test that today, the way things are going. We've got a nice trend resistance that we can, trend support that we can place in here. Some decent touch points, 3-4 touch points. That comes in probably around this horizontal level as well. So it's always nice to have a couple of levels to back each other up. That comes in at 110.76. So trend followers will be buying dips towards there most probably. Sterling dollar has continued. This is all very good for sterling. We've broken through that resistance at 129.64.5. Let's take a look at some Fibonacci retracement levels that we are potentially approaching. Wouldn't be surprised if we see that 61.8. Again, I like to take sort of like sometimes I like to take the tails out of these spike lowers and focus really more on the more significant support lines. 61.8 coming in at 130.06. Again, that's quite a significant psychological level, the 130 level. So that I wouldn't be surprised if we sort of test that today and maybe find some profit taking around that level. Let's take a look at dollar. Yeah, thanks, Mosh. Euro sterling call the other day that worked. It's sort of it's nice when one works. I wish more of them were working. I was looking at selling this and it worked. It played out quite nicely. I'll show you the chart in a minute. But you want me to take a look at dollar CAD? Let's take a look at dollar CAD. I always like looking at dollar CAD because it's very closely linked to oil. Let's look at the longer term chart, the weekly chart. We've sort of broken through this upward trending support and it has retested this. So this feels like a breakdown lower. This feels like it could extend lower again. Little bit of these like candles here, not giving a lot away, maybe a little bit like a diamond formation. I don't really like drawing diamond formations, especially when they're sort of like a little bit, I now I've said it, I've got to draw it, haven't I? A diamond formation is a bit like this. And it's sort of, can you say it's an extension sign? Sorry, extension lower I'm talking about, rather than a bottoming. Not really. I think it's sort of like, it's definitely almost like a 50-50, but we can get a measured move target out of it, basically, because if we do get this break into the upside, taking out this resistance, it would like really tell me that probably 136.67 is a short-term target. If we do get that breakdown, we can probably extend it lower. It almost works a little bit like maybe sort of using the top there. So it's like come down, spiked up, come down, like an ABC type formation. So that targets a move to 128. So I'd really feel like this is no man's land, and I'd wait for the break either way, but I'd be really focusing on the high from the 3rd of July and the low from these are weekly lows, so it doesn't really help you, does it? But really focusing on the high from the 7th of July, this 133.87, a break above there, I would go with the flow of that. And looking at really resistance coming in around this 132.60 to 70 area. That's short-term resistance. And then the major level to look at is 130.91 on the downside. Go with the flow. If it breaks there, I think there's plenty of room for an extension lower. But potentially, maybe I've got 129.28 up there for some reason. But that's probably a level from all the way back there where you can see it's quite a pivotal level, or has been in the past. And again, support would be coming in around about the 131.40. So it's trapped in a bit of a range at the moment, dollar CAD. I'd really wait for a break. I think it's like no man's land at the moment. Personally, like looking at the dollar index, it feels bearish still. Feels like there's more room to the downside. So looking at this as an extension lower, probably is the favored look at the overall feel about that. Sanadine wants me to take a look at DAX, which I love trading DAX as well. A really volatile, nice market. I think on our intraday trade ideas yesterday, we were buying a dip in DAX, but I think we got stopped out of it only just, and then the market rallied. Typical. I think, yeah, the stop was, what did it get down to? It got down to 15,998, and I think our stop was like maybe 20 points higher than that. We just got in a little bit early there. Shame. And stop placement in front of a psychological level like 16,000. Maybe the wrong idea. Oh, well, obviously the wrong idea. That's a bit silly to say, but if I have stops, I like to place them below these significant levels, and feel like and look for a test of that level, and have the stop give it a little bit more room on the downside. But it's easy to say in hindsight. But the reaction higher is really interesting. I'm looking at this as like a topping formation, but let me take that away so I don't get biased towards that. So what are we looking at from a weekly basis? We do have this area of resistance. You can see we're looking at all-time highs go all the way back on this chart. All-time highs at 16,427. ECB meeting today, interest rates expected to be hiked. That's not great for markets, but it's expected. So it's not really, unless there's the language from the central bank is more hikes coming soon, then this market has digested that news already. So yeah, if we look at it on that sort of basis, on a weekly basis, we're in this quite significant area. Where we broke down. You can see the week of the 3rd of July, we broke down really aggressively, made a lower low, and then the retracement higher. If we make a higher high, it'll be really, everyone will be quite battered and bruised by that, because I'm sure there was a lot of people covering their longs and taking profit when this broke down, and maybe even getting short, and they've felt the pain like I did. I was short all the way down here, well, higher up, around about this level here, and saw it all the way down and got greedy. So that paid the price for that. Let's take a look at the daily chart. Price action yesterday was pretty bearish engulfing candle, although in the afternoon you can see prices recovered and closed. It's like a hanging man candle, a little bit like that. But today's price action's been phenomenal, and we're sort of already taken out last week's highs, or well, we're getting to levels we haven't seen since the 19th of June. So this is just punching higher and really aggressive, and plenty of room to go higher. I wouldn't fight this one. Short-term charts, obviously, nice trend higher and breaking higher. Yeah, let's take a look. See if we've got a fib. Fibonacci retracement level. No, we're through the 78.6. So I don't really look at anything past that. This is because it's a complete change of trend. And if we look at it, we could sort of say there's a bit of a, not a double bottom because it's mid-range, but may still have that effect. If we want to sort of like have a measured move target of what we could expect as an extension, I think we've broken through that neckline. If we close there, brilliant. We're looking at all-time highs up there, 16,463. That's an extension level. So yeah, at the moment, looking really, really strong and not slowing down for the passengers. So I'm obviously that's looking pretty bullish. I'd look at shorter term timeframes and look at what's gone on in the last few hours. You can see this positivity. I don't know what the news is. It's obviously some sort of news event. Nothing I can really see. Maybe some earnings results that have come out, and you know it's affecting the markets as a whole. You can see that Nasdaq has rallied very strongly overnight. So potentially, I would say an earnings report from one of the big guys on the tech side of things. Big tech earnings light up. Fed decision imminent. That was last night's headline. So yeah, earnings painting a really nice picture there. I'll take a look at Nasdaq actually, because that's been on the back foot. The first couple of earnings reports weren't great. 61.8% fib at 15,723, definitely a target and potentially a nice place to take profit if you're long from these levels. Should get a little bit of resistance around there, but again, when these are motoring like this, you don't want to stand in the way of them. You want to wait for some sort of retracement or some sort of topping formation before entering any shorts. S&P really strong, breaking higher. Just look at it on a weekly chart. Yeah, up through that 78.6% fib as well. So looking pretty positive on the industry side of things. That leads us to our gun to head trade idea. Now, what's a gun to head challenge? Myself and Joe normally. Joe's not on today. He'll be back tomorrow. We both pick a trade at market and we enter it at market. So I'm quite pleased the show's an hour late this morning, because I always look to sort of like sell indices when they've made sort of like a significant highs. I'd already been stopped out by now, I'm not going to lie. We pick a stop and target. Risk reward ratio needs to be better than 2 to 1. The trades are closed at 9 p.m. unless the stop or the target are hit, and we basically risk 1% of capital. We started with an account, £2,000. Let's go back to the account, just show you. Haven't had a great year. Been pretty poor, to be honest. We're down to 1743. We were a bit lower than that, but we had, as was pointed out by Mosh, we had I sold euro sterling and it hit target. I risked £17, made £43. So it's given me a little bit of ammo to go again. Joe went short of euro EU 50, Euro Stocks 50, and it closed out for a small loss. So not bad. I think he was a bit unlucky because we did have that sell-off we saw yesterday, and that would have hit his target. But we obviously closed these out at 9 o'clock today. So this is very difficult. We're showing you how difficult it is to trade a small account from an intraday basis. We do have a set of rules in place, a set the guidance I've just shown you. So we try and stick to those rules. I know historically we've done pretty well with this, but since the live account has come, we've really, I don't know whether we've adjusted our style or done something differently, but it hasn't been working for us. So we've got to stick to our guns, stick to the rules, and continue in this vein, because we do believe that over time, when we have this sort of approach, risking 1% of capital, there is opportunity. If you have a risk reward ratio of 2 to 1, then we believe that over time we should make money. Not saying you will, but everyone's got their own style. But yeah, this is what we do every day, day in, day out. So yeah, when we look at these things, I like to run through, look at the different time frames. You can see I've got the 1 hour chart, 4 hour chart, daily chart, weekly chart. I like to sort of like get an idea of the long-term trend or the long-term positioning, and then sort of like what the day before has done, and then sort of break it down. And if it marries up on a short-term basis, maybe I'll try and get a signal out of it. I'm not going to stand it in the way of any of these but actually we can actually, this is all under, I think, so we can actually trade even bonds in crypto. I might start to take a look at bonds again. They're exciting. This is what I always used to trade. I used to trade the German Bund on a daily basis for a long time. So it might be interesting to take a look at these again. This is like the 10-year German 10-year euro bond. Yeah, interesting, especially with the interest rate decision coming out later. So let me run through. I'm going to, well, euro obviously will be madly affected by that. Euro sterling. Could I go euro sterling again? Let's see what's going on. This is what I did on the euro sterling the other day. Broke through there. Seems like we're bottoming a little bit. Could get some sort of pullback. Don't really want to go against what I did the other day, so I'll leave that. Euro yen looks to be a little bit of a bottom formation, but look at the weekly chart, it's bearish. New Zealand dollar CAD, again, last week was very bearish. We've had a bit of a uptick this week. New Zealand dollar, US dollar, dollar CAD. We've already analysed this. I said it was no man's land, leave it alone, so I will. Let's see if there's any other markets that anyone wants me to look at. No, there's nothing on there, so that's good. Aussie CAD, sterling yen. I'm not really getting anything. Not really getting anything alike from this. Gold. I mean, will dollar continue that move lower? Gold is up at these levels. Gold hasn't quite broken out, but it's close to a breakout. Silver the same. Copper. Yeah, struggling here, guys. Sorry about this. All right, come on, Steve. You've got to go for one. My safety net is normally gold. You know what I'm going to do? I'm going to look at Bund. Let's have a little analysis of Bund. Love Bund. Had this sort of like bottoming formation last week, but the previous week, last week wasn't so good. Had a decent rally, then a pullback. Obviously, we've got ECB out later, and for me, this looks again. The trend is lower on the daily chart as well. Had a little bit of a pullback, potential for support around 133.20. potentially breaking below that 4-hour chart, a little bit of a head and shoulders type formation. I'll show you what I mean. Oh, getting excited about this. I haven't traded one for a long time. So neckline around here. Basically 133.20. I think if we get a break of 133.20, could we get that extension lower? Measured move target would be a move to 130.98 down at those lows. Oh, Stevie, what are you doing? Clearly the stop would be best placed above this high at 134.35. That's almost a point away. Wow. But yeah, maybe going for that break lower. Let's do it. Screw it. Let's do it. Oh, Anders, let's see if we can put this trade on. So selling DE 10-year. I mean, this would be, I suppose the news would be, really need to kick off to get something out of this today. I'm down below that, stops below that trend line. Could be a little bit tighter with the stop, getting short 133.40, and yeah, as I say, stop maybe should be a bit higher, but let's take a look at this. Trade, create new order. I want to put stop target, risk 1%, risking £17.30. My stop is at 134. Nope, selling 134.16. I want to risk 1%. It's 26 units. So you can see risking £17.12 there. Target to move to 131.20. 2.85 to 1. I like it. Let's go for it. I've got the trade on. I'm scared now. Haven't done that for a while. I've really dragged the show out to like 33 minutes. Let's finish off there. So I'm getting short of DE 10-year bond, EUR, and basically that's all based around interest rates. And we got the ECB out. So very, very exciting. Let's see how that plays out. Hopefully we'll be celebrating that later on today. Right, plenty to sort of focus our attention on over the next 24 hours and next week also. We've got ECB policy decision. It says 1:15 on there. I thought it came out at 12:45. So check that. We've got US GDP at 1:30, second quarter advance reading. US jobless claims also 1:30. The ECB press conference at 1:45. TraderX, you've asked me to take a look at Aussie yen. I will have a look at that in 1 second. And Bank of Japan policy meeting tonight UK time, or tomorrow morning UK time at 3:30. Next week we got, or tomorrow, US PCE price index, August the 1st, that's next Monday. Australia Reserve Bank policy decision. US ISM manufacturing index on the 1st as well. Second, we've got US ADP employment report. Third, we got Bank of England policy decision. USM services also on the 3rd, and jobless report next Friday, the big one, non-farm payroll, and we've also got Canadian employment report. So I hope you see that. TraderX asking to look at Aussie yen. Let's have a quick look at Aussie yen before we sign off. And here we go, Aussie yen. Right, Joe normally looks at Aussie yen. He's got more. He normally has a bit more of a handle on these. So let's see what I'm looking at. We're trading around a quite a significant pivotal area. There's a range we've built up here. The high at 97.67, the low at 93.23. We're trading about mid-range, right in the middle. So from a weekly basis, we've had this extension higher. We've ran into resistance just in front of these highs from the 12th of September last year, and we've corrected really nicely. This bullish hammer that we saw the week of the 10th of July seems to be underlined, and we're posting higher lows since then. So slightly more positive from an Aussie yen perspective over the last few weeks. The daily chart, again, I've highlighted this quite significant level, pivotal area. It's been treated as support, resistance, and we've broken through that, and it is a bit of a flip-flop around these levels. Don't know if that's a technical term. But the real sort of like level to watch on the upside, 95.85, and support on the downside, 94.42. That's more shorter term price action. We've had a good start to the day. We're looking to engulf yesterday's negativity. And as I say, we're posting these higher lows. So we can get a nice little trend line building up here. So for me, looks mildly positive on the day time frame. So short-term time frame, we can see MACD crossing over as well. Yesterday's candle did its best to sort of like knock the stuffing out of it, but it's bounced back today. So looking quite positive with this a nice little trend higher lows, and good potential for the upside. I always look at the 4-hour chart, and I look for the Ichimoku cloud. Again, that gives you it's a nice trend following indicator. You can see once you're in the trend, it keeps you in the trend for quite a nice period of time. And it also gives me forward guidance on where the levels of support, resistance potentially could be. We're trading, let's get rid of this level now. We've shown that enough. And we are around quite key levels. If we can manage to break above the resistance here, as I say, take out that 95.85, really opens up the upside towards 96.79. So I would say 4-hour candle as well, looking pretty positive. If you're long, maybe having a stop below 94.40 wouldn't be a bad idea, just to protect capital. Targeting a move maybe up towards 96.79. We should have thought about this for gun to head now, but it's too late. I'm into the Bund and looking at interest rates. But I hope that's helped, TraderX. Just giving you a brief outline of what I see on Aussie yen. Thanks for joining me. Thanks for the interaction today. And look forward to seeing you tomorrow, where Joe's back, so everyone can relax. We're in Joe's safe hands. Thanks very much. Cheers.